In the eve of the Christmas holiday, Asia and Europe is basically closed with a shorter trading week. Allow us to first greet everyone, the season's greetings to all, and only the best of your trades, as we normally say. And the way the market looks like, that the US dollar had made some slight recovery with the cable on the news that their outlook for housing has declined, prompting the cable to move lower with a slight influence for the US dollar to move higher at this level, and at 79.67 on the closing for Asia, in the North American session. And this decline, which focuses on the fiscal cliff, has been assumed to be priced in the market, with that particular 79 point even basis point level here. As you could see, that this particular support on the US dollar index has been quite resilient. However, the 78.80 to 79 even level would be the best psychological support price for the dollar. We're actually looking at, let's see if we can get here a cross at the 79.79 towards the 80 level would be a possible correction for the US dollar, wherein this particular configuration here, which serves as the left head and right shoulders with that particular neckline, prices landed basically on that particular neckline extension towards the closing of yesterday's North American trading session. Now, however, as we made mention, that the weekly opening, which is at this level here, let's see if we can get price here. Okay, right now it's still at opening at 79.61, which is slightly higher, with a decline at the 79.37 level. This particular price or candle bar is right smack on the previous support, which becomes now that particular first line of resistance, where the 80.05 level on the US dollar would be the price to watch towards the end of the trading week and for the quarter of the year, towards the opening of the right after the New Year holiday. And that is also because that we would be expecting that the final decisions on the fiscal cliff would be extended towards the end of the year, and there may be some surprises along the way, but however, it is more towards the negative side for the dollar with its behavior in comparison with the euro as well as the cable and the cross rates on euro pound. This is the cable chart where on our previous and most recent market view dated the 17th of December, we had an average of 1.6186 level on long on the cable, apparently on the way down at 1.622550 level, on the way down that it was settled giving way for our original counter trade for the cross rate to be able to maximize its potential. And that particular two positions on cable on the week of December 17th, we already had been able to maximize that particular potential with the monthly on the euro compared here has just recently broken its previous resistance, but we will be discussing that more particularly on the daily, where the configuration here on the euro, where prices had become a tug of war for both bull and bear players in the market. Struggling shorts have liquidated their positions, making a longer candlestick when it touched the price level at the, let's see if we can get it again, at the 1.3307, which most of the previous shorts who started shorting at the levels of the 127 to the 129 to the 131 level on its way up, because nobody really that a V formation, this particular candle bar on the start of the opening of an Asian trading day, and here have particularly provided a signal that there may be a correction, but a follow through on the up move higher than the previous 1.30 level or 1.3107 has been engulfed by the next bar's up movement with a follow through and making the prices influence the cross rates on the euro pound on a weekly basis, here penetrating above the 0.8148 level, which happens to be the resistance, and this yellow prices here is the actual trading range on a weekly basis, from a low of 0.80 to a high of 0.8145. And of course the week isn't over, but however the weekly chart here, it is at the 0.8176 level, which is already above the particular highs above 0.8167, and this is particularly a new high for the euro pound. And in comparison, this particular pin bar on the candlestick formation with a follow through doji on a weekly, correspondingly with the cable with a spinning top and a morning cloud formation here on the euro, have signified that the trend for the euro has already changed hands and a price reversal was in the making, looking at it on a weekly basis. But however, on a daily basis, it would be quite difficult to identify that such price reversal would have been made, simply because a bull trap was established here. Okay. As far as most traders and analysts at the minds of their particular price movement, that the comments of ECB President Mario Draghi was still in place, with cutting interest rates or a reduction of rates would be made. However, that was also been overcome with a huge engulfing bar here on the technical outlook, although looking at it on the weekly here on the pound as well as the euro here corresponds that it is already a bull formation for a continuation of the bull trend for both euro as well as the cable. However, this particular long week where there was a tug of war between short sellers and buyers, where most of those shorts have been liquidated simply because of the stronger momentum that it did as far as price action is concerned, where most of the momentum here on the weekly of the euro, in spite of a thinly traded market due to the holidays, the euro as well the euro pound cross rate has moved above its resistance level of 0.8145 level here, and currently working at the 0.8176 level. Again, the trade outlook here as far as the position would be more on the long side, where a bullish trend is still intact, that the November 8th low of 0.7955 low has been registered, with the 80.78 breakout from the trend line, and on December 5th is the 81.45 level here, and those two particular positions long is actually trailing on the long side of the trade on the way up, and it's mostly based on volume and open interest compared with the financial futures, where momentum have increased and the price action and behavior of the market had been more towards the long side of the trend. As you could see here, the monthly charts on the cross rates cable as well as the euro, with the euro penetrating its resistance level here on the monthly, that particular trend higher confirms that the market would still have some legs to move higher. In spite of the comparison on the cable here on the previous month, wherein a hanging man was made, technically it would have been a negative signal or a bear signal, but however, the trend is still within, or rather that particular configuration is within a rising channel. And so as the cross rate euro pound here, where it recently broke its resistance level on a monthly and signified that there is still enough room, and a 50% retracement, we're looking at closest to 0.8225 to 50 levels here, which is actually the initial target. The high of 0.8180 as of yesterday's trading in the North American session gave way to its first initial objective. As we have made mention, that the trading week of December 17th here have showed that the tug of war and struggle between the bulls and the bears, after a gradual climb from the decline nearing the 0.8020 level, is the best support level. The pullbacks from the highs on the 2 consecutive days, let's see if we can get it here, There you go. Those 2 consecutive days of pushing through on December 19 and the 20th have been influenced more by the price correction of the euro rather than a price reversal, so much so that the prices on the euro has held on the high charts. However, the continuation of this trend is still intact, with some position adjustments and liquidations before the last trading day of the week and a quarter for the year. There's still some room for prices to head higher entering the new year, although some may disagree, but the next leg higher will be confirmed that after, when prices do make a follow through, simply because the midterm objective is set at the 0.8280. That would be equivalent to the next wave on the high side. Although here what we're looking at, we're basically using the candlestick theory, the Elliott wave, the rising channel where we see the supports and resistances, okay, and the moving average where the prices is way above the moving average on these currencies. The high-low pattern, the Williams percentage range, stochastics, and momentum indicators here, that you could see that the momentum here is still way much stronger, and that market sentiments would spill over towards the end of the trading week, and more likely that the probability for this market potential in the opening weeks of the new year would have to make a follow through with some daily pullbacks as well. However, this confirms our market outlook for the strategy on the euro-pound cross rates, where we have used the cable as a testing ground for being able to have the potential of the cross rate, which we're looking at on a midterm strategy to hold towards the opening of the new year. We hope that this market outlook would serve as a guide, and that is also the reason why we're sharing our outlook for the trades on the euro-pound cross rate. Again, we would like to stress that this market outlook and trade plan has been initiated, and we do not make any guarantees nor imply that the same results would be the same. So trade wisely and have a good season holiday. Have a good day, and thank you very much.